In this video, we are going to be analysing Mullen, ticker MULN. Now, this stock did run up yesterday and is running up again. As we're recording this video, we're up 12% today. Now, firstly, when you look at a chart like this, seems quite strong, something we could definitely be long bias on. Word of warning, this stock is down 99.9% since it's IPO'd. Be cautious if you're buying anything like this. Personally, never anything I would buy. I only short just because, again, the value is not there. And we will be going through the resistances when we look. If you are a bag holder or you're looking to buy long on this stock and you want targets, that's what we'll cover. Or if you're more like me, who's going to be a short bias trader, where we could be looking to short this stock. So firstly, we'll just cover, and probably the easiest one out of them all to be looking at is going to be the 3-month anchored VWAP. This seems to be really good at just capturing kind of these tops when you kind of get these short squeeze moves. They can tend to be good either targets if you're long bias trying to catch this falling knife, or again, if you're more like me, a reversal trader or a trend trader, you're going to want to kind of trend that downside move. And again, that's when we hit those anchored VWAPs. But even from now, that's quite a far move. We still require about 100% move just to come into the 3-month anchored VWAP. And again, VWAP, volume weighted average price. That means over the last 90 trading days, the average trading price, when you add up all the shares traded times by the volume traded, obviously divided by the amount of shares traded, is going to take you to $1.21. So really just showing how this weak this stock has been, especially kind of in the last kind of 2 months of this, because again, the majority of this anchor VWAP is being held up by the previous movement back here, but again, weak movement more recently. Now, what are other key levels to be paying attention to? And again, this should really just give you an insight into how weak a stock like this is, and if you are buying it, just a caution you need. Because the year-to-date anchored VWAP, that's what this blue line is here. The year-to-date anchored VWAP is at $2.32. So we still need about 500% move just to get to where our year-to-date anchored VWAP is. So this is only going from January 1st, and that's how far below it we are just because this stock has been so weak this year. And then you've got all the others anchored VWAP. So again, that's going to be 2, 3, 4, 5 years and a anchored VWAP since its IPO. And again, they range from around $9 to $11. So again, just shows you how far the stock has been selling off, and just a big caution if you're buying anything like this. But again, really the main cover, I guess, is going to be what levels are we looking at. So again, we talked about the anchored VWAP, $1.20, definitely something we're looking at. Watch how we react if we do push higher around $1. Key psychological level was also an obvious support back here, turned into a resistance here. So just going to be that key level. And again, if we're holding it long now, that would be a target. And if we don't currently hold any, could be definitely be an area where we look too short. Thing with Mullen as well, does have options, which means we can trade it to either the up or downside, because again, if we're shorting, we're buying calls. Always will buy calls just to hedge that risk, because a stock like this can move, 100, 200, 300%. And if so, we don't want to be, blowing an account on a trade. So even if we're shorting, again, the downside may not be massive, because if you're shorting at $1, even if it went down 50%, you're only making 50 cents a share. And that's why we need to buy that protection, because again, you need to limit that downside risk, especially when you're shorting near all-time lows. But overall, definitely something I'm short bias at. Coming into any of these resistances, really, I'm pretty happy to be shorting at, because again, I just don't see the upside potential on the stock. And even if there is upside potential, I do think it'll be short-lived, like we've seen in basically all of these pops. So the ticker NKLA is up 8% today. Now, what are the key support and resistances we want to be paying attention to on a stock like this? Now, this is key because we did basically trade the stock before. We talked about these key resistances. These levels haven't really changed since we did the previous analysis. Since then, obviously, we come into these overbought areas. We got that sell-off you would expect. And now we're trading back at fair value. Fair value is at $1.20. So that's basically where we are now, back at fair value. So if we get a second run, what are the key levels we want to be paying attention to? So from the resistance standpoint, basically the same, 180 to 190 is our first set of resistances like we had back here. And again, you tend to get a pullback on that first attempt, and that second attempt is usually the one that will break. If you come back to retest it again, it's because buyers are trying to overtake the sellers. And so the chances are you're going to break through, which is what we got. So then the next resistances will be at 275/260. And again, we had this level that hasn't really changed since last time. you got that pullback, you get that second attempt, and then you break through. And then to cover the final resistances, which would be 330, 370. And again, you had that resistance, you retest, you break through, you pull back on that first attempt, and then in this case, obviously we didn't retest, so there's no way to break through. So then we pulled back, came back down to fair value, and again we're starting again. So we're paying attention to these resistances when we get, or if we get that another move to the upside. Also want to note, just from the resistance standpoint, is where the anchored VWAPs are. The key ones you're going to want to be paying attention to is 165, 290, 536, and if there was any sort of like a mega squeeze, 1114 would be the next key resistances. Again, these are just anchored VWAPs from different points in time. The 160 is a year-to-date anchored VWAP. The 292 is a 2-year anchored VWAP. This 535 is a 3-year anchored VWAP. And then this one over here, orange slash kind of pinky ones, because there's 2 VWAPs in there, is going to be the VWAP or anchored VWAP since its IPO. Now, to go over to the supports, what do we want to be paying attention to? Again, stocks like this, never really anything I tend to buy. I only really short them to the downside when they squeeze. But if you are someone who likes to be buying these sorts of stocks, I would be waiting for a move between 120 and 180 and waiting for a break below. And the reason for that, between 120 and 85 cents, is if we zoom out to the standard deviation channel, as you can see, that is the area of fair value. And what fair value is quite self-explanatory, where you think the stock should be trading based on the information it's given us over the past year and the 6 months. So if we're investing in a stock, which again, if you're buying kind of at the lows, is probably what you're trying to do in a stock like this, we want to be buying when we're below this fair value, because then we're getting it at a discount on both a 6-month and 1-year outlook. So we're looking for it to get below that to start buying or investing in it. Again, not something I personally invest in, but if it's something you are, usually we want to be buying below that level. Now, just to quickly note the supports, these again can be used as a trading or investing level. We only have one, that's at 47 cents, first deviation on the 6-month, and then all the other ones lower than that are all negative, which obviously we cannot trade. So we'd be basically looking at that 52-week low, and that would kind of be our support. You've got the psychological 50 cents and obviously that first deviation. So if we came down that low, could be a nice potential strong bounce location. Apple, ticker AAPL, do have their conference later today. It's going to be 1 PM Eastern, and that's why we're seeing quite a lot of volume and movement in the stock today. So to get straight into it, this stock is actually really respecting levels today, which may mean it can be quite easy to trade coming into the event, but again, we'll have to see how it goes. But to quickly just go into the intraday time frame, just so we can quickly see how it's moving today. Firstly, you have the anchored VWAP currently at around 178.70. And we can see in the morning, came through, retested, and then we broke straight down. And then we came down to our 177.80 support, bounced off here, retested, broke through, which you would expect on that second test, retested it as a resistance, and now we're setting off once again. So it's really respecting the levels we had planned out for the day. Again, anchor VWAP we're always paying attention to. And then this level here, what this is our 6-month first deviation. So again, that's going to be from this chart over here. So though, to cover the rest of the levels that we want to be paying attention to coming into this event, and then also just coming into kind of the end of the week and going into next week. So the main things I'm paying attention to is, firstly, again, we can be looking for this potential gap fill. This we'll be paying attention to if in this event we come in more bullish. Now, one thing to note is, again, we're always looking at history, what happens at Apple's events normally. Normally with these events, you kind of get a bit of buying pressure coming into the event, and then once the event starts or around ends, you tend to get that sell-off. So again, we're taking that into account, but if overall it does come into a lot more strength, then we do have that gap fill location around 183 to be paying attention to. If we go higher, we then come into the fair value area of 188.50 to 197, which would also take us into the 52-week high. And just to note supports, again, because it's not just today we're looking at, also paying attention to the end of this week, coming into next week, we do also have a resistance, just to be paying attention to at 207.50, but it seems quite far-fetched. We probably won't be seeing that, so I guess the main upside targets will be the gap fill around 183, the 188.50, and the 197, again, for that fair value range. Now, to start paying attention to more supports and the lower down levels, so we do have our level at 177.80. This is our 6-month first deviation. Again, this is the one we talked about intraday. We bounced the first time we came into it, then we broke through, retested, and now we're selling off again. So again, on the event, that's going to be the real decider what happens off the event. If it takes us down, then we'll be looking all the way down to kind of take us down to the support at 169.50. That will be the key support we're paying attention to. Again, still quite a big move just to happen off the event, because that would be a 4% move, but definitely possible if maybe there's a lot of differs from the leaks. So 169.50 support, and if we went any lower, 158.60. So again, just to recap, we have levels 177.80, 169.50, and 158.60 as somewhat supports. Again, that why I say somewhat is because this 177.80 is kind of support / resistance depending which side of it we are on. And then again, resistances, we have the fair value range between 188.50 and 197, and if we're somehow able to break that in the near term, 207.50, which would be our first deviation. Advanced Micro Devices, ticker AMD, is basically flat on the day as of right now, but we do expect some volatility to come into this stock because we do have the stock ARM. So ARM IPOing today, and again, this is another chip maker, so we should be seeing some movement in AMD, and we should also be seeing some movement in Intel, and that's why we uploaded a video on Intel just before this one. But let's go over the key levels that we're paying attention to. We'll quickly cover the supports first because that's what we are closer to. So 104.80, this is our first deviation support. The way I'll be using this level is if on the IPO release we get a quick sell-off, this could be that nice potential area to get in long and try and capture that upside move. Now, if it's just taken quite negatively and we do continue to sell off, we do have the 1 year first deviation level at 99.50, but what you can see is we also have the 1 year or year-to-date anchored VWAP also at this level. So it's kind of two strong resistances at the same level. So definitely something we'll be looking at as a support. Now, if we go lower, we do have another support at 87.70. Just wanted to note that so we have it locked down. But again, that would be quite a big move required to get us anywhere near there in the kind of in the few weeks or so. Good looking forward. Now, to push into the resistances, which again, we're quite far off of, and that's why we covered the supports first, because these are more the likely levels that we hit. But as of right now, obviously, we have been hugging this first deviation over on AMD for a while, which means for us to get to the overbought areas is going to take us quite a while, because we need to break through our fair value area, which is currently between 120 and 122. So we would need to break through this level, and then we start having our upside targets and strong resistances at 139 to 139.50, which again is our first deviation between the 6 month and the 1 year, which would kind of be that main focus. But again, considering we got the IPO today, just want to really see the volatility come off on this. Support at 104.80, and if we had quite a big move to the downside, 99.50, and targets to the upside. Considering we're so far out, and this would probably only be a day trade, we could be using our 3 month anchored VWAP, which would be around 111.70, and also just a psychological level really at 110 is kind of the targets I'd be looking at from an intraday perspective. But again, if we're holding this for the longer term, then obviously fair value we could look to target at 120. And if we wanted to hold through that, we have 139 as those further out targets. But what would also require a 52-week high. So again, quite a far push as of right now. ARM Holdings, ticker ARM, is going live today. So it IPOs today. This stock you probably heard about before. It was very big basically last year when they were looking to do a merger with Nvidia, but then the UK government blocked it. Again, they are IPOing today. Normally this will happen a few hours after the open. So as of right now, obviously this is why the chart is glitched, but it will just be under the ticker ARM. Now, how are we preparing for this? Because this is going to be one of the biggest IPOs of the year, if not the biggest. So there will be a lot of trading opportunities, probably going in a few weeks down the line, but especially today there will be a lot of volume that we can look to trade. And how are we looking to trade this? So firstly, where is it looking to open? It's going to open around $51, which is the higher side of its range. Don't know where it was on here, but it was expected to open between $47 to $51, but it seems to be taking the higher side of it. So on IPOs, the main things I'm normally looking at is normally just a normal VWAP. You can get that volume weighted average price, and then just the key psychological levels. That's normally how these are going to be the easiest way to trade. So obviously we're putting back, we're looking at the $50 support, $45 supports, $40 supports, and looking to buy these up. Because again, we probably will see moves as low as 40. We'll probably see moves as high as 70, I would expect, because again, these kind of stocks, they just move crazy on the day of release. So I would be looking for a volatile move each side. So really it's going to be paying attention to the VWAP after kind of 15 minutes at least. But before that, psychological levels if we're looking to trade it. Now, again, one of the key things to be noticing as well is the float actually might be quite small considering how big the company is, because it only 9.4% of the stock will be in the public. Again, the rest will be held by its owners, so SoftBank. So that's the key thing to know. And again, a lot of the big banks have signed up to kind of own this. And again, you can see obviously Barclays, JP Morgan, Goldman Sachs, MFG. So a lot of big names on there as well. So again, this is probably the most anticipated and kind of the biggest IPO of the year. So we'll be seeing how this acts. But again, main focus is going to be on the VWAP levels and the key psychological levels if we're looking to day trade it. But in general, just be a fascinating one to watch. AVTX is down 25% today. Now, what do we really want to be paying attention to? Because obviously this stock had a massive sell-off here. And again, this was down to a FDA missing endpoint. Then we more recently, from about the 16th, we've had a kind of more of a recent run in price. So what do we want to be paying attention to as key levels on this? So firstly, you can kind of see we pushed to this resistance, and this is where we started selling off. Now, what is this 24-cent resistance? This is what is considered fair value on the stock going out into a 1-year time frame. So normally if you're buying below this level, you're getting the stock discounted, and obviously if you're buying above it, you tend to be paying a premium. So if we were investing, normally we want to be buying below this level, and again trading to that fair value, which we kind of saw here. What is also interesting though with this level is not only is it our fair value, but what you can see here is, again, this stock has sold off, and that's why it can be hard to kind of find these levels. But this stock has been selling off extremely harsh. We are basically down. It's still near all-time lows, but what you can see at this 24-cent level is also our 2-year and 1-year anchored VWAP. So there's just kind of a lot of reasons for there to be resistance at that level. So we are pulling back now, and that's why. So if it was something you were holding long bias, that is always going to be an area to get out. And even now, unless we get that second run, most likely we are just going to continue down and probably just push back down to those all-time lows of around 8 cents. Now, just in case we do get that second run, what else do we want to be paying attention to? Because we don't really have supports on a stock like this, because it's not really something we want to be buying. If something is sold off this harsh, really, if anything is ever down, if we kind of go from its IPO price down to its kind of all-time low, you know, it sold off basically 99%. We don't ever really want to be buying stocks like this, because more than likely they will continue that same trend. So to me, I don't have supports. We'll just talk about resistances. So if you're either bag holding or you try and trade the momentum and you want resistances, that's what we'll cover. So 24 is still going to be a resistance if we get there. But then the main focus will be if we go higher, we would need quite a big move, but it would be 84 cents, which would be the 6-month first deviation. And if we go any further, we then have $2.20 and $2.45. And again, these levels very far off, don't get me wrong, but definitely are achievable if this stock gets any sort of a squeeze. Because don't forget, we were at $5, you know, going back 2 months. Now we're at a low of 8 cents. And again, it is a kind of therapeutic stock. These stocks are very volatile and will always be down to kind of how the FDA trials go. So, I mean, if you see some relatively good news come out of a company like this, FDA related, you can see that kind of squeeze happen. And if so, could take us to 84. And if we get a mega move, then obviously the 220, the 245 is definitely things we could be paying attention to. Again, like we said, we're not really going to be covering shorts because it's not something I would ever personally buy. But again, we don't really have supports or supports of technical levels. So it would be more just paying attention to the gap fill location. So kind of 12 cents would be key. And then also kind of this 9 or 8/9 cents that was created obviously back as well. So I mean, there'll be the 2 supports if we were looking for some to be looking at, but otherwise not really focused on the support side of AVTX. Intel ticker INTC is the stock we're going to be analyzing today, because we do have the stock ARM IPOing today. And again, as that's another chip maker, we could definitely see big movement in Intel and then also AMD. So we'll be covering AMD after this video. So to get straight into the key levels, what do we want to be paying attention to? From supports, we have a close support at 37.80. So that's what I'd be watching more for. Say on today on the release, we'll probably see some volatile come into Intel. And if we do get that pullback, this could be a nice potential long bias area where if we want to try and trend this upside move, this could potentially be that nice entry. Now, if we just skyrocket up, and that seems to be more likely because ARM pre-market, or not pre-market, but pre-IPO is meant to be launching at $51, currently trading around $60 from what we can hear. So more chance than not we're going to push to the upside, and if so, we have resistances at $41, $42, which would be our second deviations. And then if we go higher, we actually have a few more strong resistances, $44.15, 45.35. Now these are our third deviation, so these are really high probability reversal levels. So if we saw a push up to these sorts of levels, this is normally when I would look to sell and trade that downside move. And what we do actually have right above here at 45.80 is our 5-year anchored VWAP. So this is another really strong resistance or support depending on what side you are, but obviously right now we are on the resistance side, so really a strong resistance. So I would kind of use it as 45.35 to 45.80 as a range. Again, we might not hit that today or in the next few days, but even if it's a week or two down the line, definitely a resistance I like the look of. If we can come in here, I'm definitely looking to play that downside. Now to go and cover more supports, obviously we covered that 37.80. Right now we are a bit more overbought because we can see these these grey dash lines. What these are is our fair value from a standard deviation perspective. So if we can see that we're at fair value, usually buying above this, you're paying a premium. Buying below, you're getting a discount. So we're always taking that kind of into account. If we're looking at investing, I would kind of not be as of right now. I'd be waiting more for a pullback. But that does mean if we are trading it, normally if we go shorting, say these levels from the 41s and above, we could be using the 35.75 as a target. Now just to cover in case we did go down any further, we do have another strong support at 32.60. But again, I think that would be quite a few weeks out if we try and hit that level. So I think the main focus for today is the support at 37.80 and resistance at 41. Again, we're going to have to see how the ARM IPO affects Intel. But if we do get some volatility, those will probably be the key resistances, and that will be the key support to be paying attention to. SAVA Sciences, ticker SAVA, is the stock we're going to be analysing today. So what are going to be the key levels we're paying attention to? So this stock has kind of bounced off this low, and we are pushing to the upside. So what are going to be key resistances, because that's what we'll cover first. So we have $22.75, $24.50, $27. Now, these are targets where we would use these more as targets, especially these first two. So if we were holding this stock long bias from fair value or below, obviously those would be the targets we would look to trade to. Now, coming up to 27, this is where you start coming into the second deviation. Now, the way we normally use standard deviation, and again, if you probably learned about it before, maybe not trading related, but standard deviation in general, is these gold ones. These are first deviations. That means 68% of the data is likely to trade below it. Coming into this second deviation, that's 95% of the data is likely to trade below it. So that's why we tend to use these more as targets, but I'm not a massive fan of shorting these first deviations. However, if we push up to $27, not only would I use that as a target if I was long, but it's also an area where I start to flip a lot more bearish and we'll look to trade this stock to the downside. Just to quickly note further off resistances, we do also have levels at 31 and 31.30. So again, you still got that second deviation, so that's 95%. And this green line is our third deviation, so that's 99.7% should trade below. So that's why, again, we tend to use these as targets. They're not exactly kind of fixed levels, you know, like obviously when you do normal technical analysis, like this level probably would actually be one anyway, because lines up with previous resistances, but these deviations don't always line up with previous resistances. They're just statistical probabilities, a bit like a Fibonacci retracement is kind of how these work. So again, they're going to be key resistances, and again, it is the stock market. Nothing's going to be, say, 99.7% accurate like the third deviation suggests, but it just gives you a good indication. If we come into these levels, we expect that pullback to happen. So they're the key resistances. Now, to cover the supports, we have these dash lines here. These aren't normal supports. What this is the range between fair value between the 6-month and the 1 year. So this again is when SAVA is then at fair value. So the way we tend to use this level is a target if we're reversal trading. So again, if we're shorting this level, that would definitely be our target. But what we can also use this level for is if you're investing, if this is a stock you want to invest in for the long term, the way we use these levels is this is where we want to be buying at this range or below. We never, if we're investing, really want to be buying above this level because, again, normally you're going to pull back down to fair value within time. And again, if we're investing for the long term, 10 to 30 years or so, that kind of difference, we can be a bit more patient. We don't need to get into it today. We can wait for that pullback and then get in at a better value. Now, though, to cover into the supports, if we push to the downside, we're going to be looking at 1450, which, yes, would be a 52-week low. But again, this you could kind of think of as like the Fibonacci extensions. They don't need to be where price has already been to give you levels, and that's why it can be lower than current prices that we've hit. But if we go lower, we have 1450, 1070, and 1030 as 3 key supports to the downside. And that's probably what I'd be looking at more on this stock. Because to this one, again, if we just zoom out and look at this chart from a longer term outlook, what you can see is obviously very clear downtrends over the 6 month and the 1 year. When we see this, not something I usually want to be kind of trading to the upside. I'd much rather kind of short these resistances and play the move to the downside, and at a push kind of target these lower deviations. But again, if you are long bias, you want to trade this to the upside, then they can be supports to be paying attention to. Ticker ORCL do have their earnings after hours today. So what are the key levels we want to be paying attention to coming into this earnings, and then also looking forward into next week and so on? So right now we're sitting at $125. Now this is key because we may be very close to those 52 weeks highs. Again, 52-week highs are at $127.50. However, what you'll see is these grey dashed lines. What are these? This is considered fair value on the stock. So from how stock's trading, this is what it's justified kind of statistical mean is between the 6 month and the 1 year chart. So considering we're actually very close at this, but we're near these 52-week highs, this does just suggest in general that the stock is moving reasonably, like in a kind of a slow but controlled manner, but is overall quite bullish. So that's one thing firstly to note on Oracle. But the thing to consider is if we're coming into earnings and we're near fair value, the reactions are normally quite small. And the reason for that is, again, you're not overextended in either direction, so you don't expect a huge correction to happen. So we are at fair value, so not expecting a massive move, but we will go over the key support and resistances. And just to note, what are the options pricing? And the options are pricing in about a 7-point move either direction. So what we can do, and when we cover our support and resistances, you'll be able to see how close that is to what we're currently looking at. So again, that was 7 points they were pricing in. So that would take us to 132 to the upside. And if we're looking at the downside, that's going to take us to around 117. However, what you will see is the levels we have drawn out aren't really near those levels. And the reason for that is just because this stock, how it's been trading, the deviations are quite wide. So what it really does actually mean is we need quite a strong move on this earnings, kind of a much bigger or lower number than expected to have a reaction. Or again, we need them to, which would probably be the biggest catalyst, is if they either increase or massively reduce their earnings forecasts. Now, if we go to the downside, we're looking at 110 and 105, which again will require around a 12% move off earnings to hit these supports. But they're the two supports we're paying attention to. Then, to cover the resistances, what we need is around a 11% move also to the upside. And then this would take us to the resistance of 138.50 and 139.30. Again, these are both our first deviations. And again, because we can see how this stock's been trading, it has been uptrending, but it's been doing it, in a kind of a slow and controlled manner, which is going to make these levels usually a lot more strong. And again, it justifies why fair value is basically at the 52-week high. And it's just because, again, we came into an overbought area, we pulled back relatively slowly, and then we're pushing up relatively slowly. So we can kind of break into that fair value again. So basically what this means is not expecting a massive move off earnings, but if we do, the supports and the resistance are quite far off, and they're going to be 138 and 110. Roblox ticker RBLX is down just under 7% as we're recording this video. Now, what are the key levels that we're paying attention to? So we will quickly cover the supports first, because obviously we are selling off today. Right now we're at $27.50. Supports are quite close at $26 and $25.60. These are our second deviations between the 6 month and the 1 year, so some strong supports. But if for any reason we are able to break straight through these levels and continue down, we have two more supports quite far off, but they are supports, and that's going to be at $20.50 to around 2025. So basically that more uses a range, but would be a strong support. But again, from where we are now, could be something that's a few weeks or months off if we continue to sell off, because that is a 25% move from where we are now. So obviously very far, quite extended. But to hit the 26 and the 25.60, we only need to see about a sell-off of about 4.5%. So a lot more likely that we can see this if the selling pressure continues. Now, to get into the resistances, we have some close resistances at 31.50, 31.15. So again, these could be used as some, basically more as targets if you're buying up these lows. And again, we'll target this. Will normally be a good target that we can be paying attention to. But one thing I did want to note, and again, that's going to be the main trading opportunity on something like Roblox, just targeting those resistances. But one thing I do want to note, and that I like to point out where the max anchored VWAP is. So this is since Roblox's IPO. If you're usually buying below this value, it's considered a good or cheaper than the average person owns. So again, if we're investing, this is a really good level to be paying attention to. From trading aspect, unless we're near the level, doesn't matter all that much, but just wanted to know in case you're maybe not looking to trade the stock but invest in it, whenever you're looking to buy a stock, if you can get it below its anchored VWAP since its IPO, it's normally going to be a good investment choice if you've obviously done your due diligence on the stock and you want to be buying it for the long term. But again, we are below that because that's currently at $54. So as of right now, we're getting quite a steep discount off its max anchored VWAP. And again, that may be something you want to look into more, because a lot of that can be down to, obviously, we IPO'd, we shot up, and now we've sold off. So people could be saying this is more of a reasonable area to be trading in. But again, we're always paying attention to where that max anchored VWAP is, and currently, again, around $54. So below that is always going to be discounted. Rocket Pharmaceuticals, ticker RCKT, is up over 40% as we're recording this video. Now, why is this? So the fundamental reason, or the catalyst, is that the company announced that it has an alignment with the FDA with its global phase 2 pivotal trial. So again, always anything FDA related on any of these pharmaceutical companies, biomedical companies, always going to make the stock either skyrocket or crash depending on if the news is good or bad. So that's firstly the catalyst. Now, what are the key levels we want to be paying attention to? So right now, we're pushing around $21.50. Today, we've been trading quite nicely between levels we would expect. So on the resistance side, we have $22.25, and on the support side, we have $20.10. These are both from the standard deviation channel charts, just in case you wanted to know where these levels are coming from. And that's where we got them from. Now, what we're paying attention to, again, we don't tend to usually trade the range. We wait more for a breakout, and then we can trade the reversal. At least that's how I trade, because I'm a reversal trader. So firstly, we'll focus on the upside move, because I think this is where we get the highest probability trade. And that's if we can break outside of this 22.25 area. Then we have two really strong and key resistances to be paying attention to. And this is at 22.67 and 22.85. Now, what these two levels are, you have the anchored VWAP going back 5 years and an anchored VWAP since its IPO. So these two levels are going to usually be really strong levels where stock tries to, just struggles really to break above. When we're below it, obviously we're trading at a discount since it's IPO'd. So anywhere below here, usually a good buying opportunity, especially if you're looking at investing. But because of this, there's always a lot of orders sitting around here. Sometimes people taking profits as it comes into some sort of a fair value. Or a lot of time can lead to the breakout if we're retesting it for a second time, because then again, you've got the people trying to buy in to take it through that anchored VWAP, as it's a good level to be investing at. So again, this is normally going to be a really good target if we're trading at long bias, but also an area where we use it as a target, but can be a good idea to potentially be short bias. So if we push up to this level, probably going to be something I'm looking at shorting. And again, does have options, so that's quite easy, or it can make the trade quite a lot easier, because it means we can short the shares and buy calls to find that risk, or we can just trade it strictly through options. So I wanted to point those out, but if we do end up breaking through these levels, then we do have resistances at 23.90 and 24.40 as some strong resistances. And just to note one further out level, just in case we had quite a parabolic move, 26.25. But again, my main focus is going to be on these, and the reason I like to trade it with options as well is we can short the shares, buy options out, say a month, get a month worth of protection in case it doesn't, reverse right away, which, frequently does happen. Sometimes it takes around 14 to 21 days to start trading back below this level. So if we can trade it through options, we can buy that protection, let it kind of temporarily go against us, and then wait for that move to the downside. So that's my main trading opportunity that I'm paying attention to. But now to get into the supports that we can be paying attention to, so we already covered this $20.10. If we break this quite far off, because we basically need to raise most of this gap to get into the support levels, but that would be at $17 at $15.90 as those key supports. And then obviously you got that gap for around $15.25 to also be paying attention to. Tesla, ticker TSLA, is up 6% today. Now this is off the main catalyst that Morgan Stanley has increased their price target from $250 to $400. So to get straight into it, what are the key levels we're going to be paying attention to over on Tesla? So as of right now, if we start to pull back, I'm not too interested in this stock, and the reason for that is we're not really at tradable levels until we can get a bigger move. So if we push to the downside, we'll cover the supports first. Our first support is at $222.50, which is obviously a relatively large move from where we are now that would require us to drop around 15% in price. So quite far off, but is a support we'll be paying attention to, week, month down the line. And just to quickly note the other two supports, just in case we had some sort of a monster move, would be 175 and 181.50. So they're going to be the three key supports, but what's more likely and what we're closer to is going to be the key resistances. And that's going to take us to 274. So 274 is our first deviation on the 1 year, would be a strong resistance and actually not too far from where we are now. That's going to be about a 4.4% move, which obviously on something like Tesla can happen quite easily even within the day. So that'd be the first key resistance I'm paying attention to. If we go high, we then have two more sets of resistances being at 315 and 320. So again, that's going to be the main focus, I think, over on Tesla is, yes, you have the supports, but they're just so far off that, that'll probably take at least kind of a month to probably get to those sort of levels. So again, the main focus is going to be on resistances, which is 274, which is going to be the closest one. And on this, I would use a bit reduced size. And the reason for that is, first, I mean, we've hit this level before. And again, looking back even just kind of 2 months or so, we were at near $300. So if we retest that, we are likely to break. And then that's when I think the further up resistances will be more key. And again, that's going to be the 315 and the 320 as those two key resistances over on Tesla. Rocket Lab, ticker RKLB, is down 10% today, but what are key levels we want to be paying attention to? So to quickly note the supports first, because we are pulling back today, we do have a support at $5.33. This is our first deviation on the 6-month chart. This is also quite nice because not only is it a key deviational level, but we can see this has been quite a significant level in the past just from a normal technical area to be looking at. So that's quite a nice support. We'll see. I think we did literally hit this intraday. We can quickly check. Yeah, he missed it by 1 cent, but that's where we've got the strong bounce. Slowly trending back down. So we'll see if we get that retest, we're a lot more likely to break. And if we do, what is going to be that next support level? And that would take us down to 490 as that key support from here. Again, seems somewhat significant from before. You see a bit of consolidation on the second attempt. On the first attempt, obviously, we got that strong pullback. So again, also showing not only as a technical strength, but also obviously our deviation. And then if we break that, we also have another support at 425. One other thing to note as these supports, obviously our key level is at 490. But at $5, obviously you do have that key psychological level. So be paying attention to that as well. And you could probably even use that as a range, kind of a $5 to 490 key range of a support if we break this 533. Now, though, to cover the resistances, if we start getting bought up from this level or potentially one of these lower levels, for key resistances, obviously we do now have that gap fill to be filled just around kind of that $6 level, $6.04 to be precise. So we can be paying attention to that as a gap fill. And if we go high, we then have the 685, 750, and 780 as further up resistances. And again, that's not too far-fetched considering, again, you go back kind of a month or so, we were already sitting above those levels. So definitely a reasonable level that we could hit. So that, I guess that's really the main focus. But again, we are pulling back as of right now. So main focus on the supports of 533, 490, 425, and targets / short bias levels of 685, 750, and 780. Canopy Growth, ticker CGC, is down 15% today, but has been quite a big mover in general recently. So what are key levels we want to be paying attention to? So to quickly, we'll start off the supports. Again, if we continue kind of this pullback, these could be entries where if you're a trend trader, these could definitely be entries to be looking at long. These aren't normally ones if you're a reversal trader to be buying up because we are above fair value. Because again, fair value on this stock is actually kind of near this low of kind of around 30 to 15 cents. So we are more, considered more overbought. So if we're a trend reversal trader, we're not looking to buy these levels. But again, if you're a trend trader, these could be good buys. So that would be 85 cents and $1.25. Now, for resistances, 172. That's kind of the one we hit recently. Is where this issue kind of started and we started to pull back. But if we are able to retest it and break through, then we do have more resistances coming into 240, 260, and just as a kind of extended level, 350. Now, 172, 240, 260, and that kind of 350 level. What these are levels is usually going to be targets if you're a long bias trader. But if you're a reversal trader like me, these tend to be more levels where you tend to trade the stock short bias. Again, looking to trade back down to some sort of a fair value. On a stock like this, again, we did say fair value is actually below that 52-week low. So we probably won't be trading that to a target, but instead using the lower deviations. So 125 and 85 cents as targets if we are shorting that 172 or above. US Bancorp, ticker USB, is down 4% as we're recording this video. Now, what is the catalyst and what are the levels we're paying attention to? So firstly, just go through the catalyst reason. And again, maybe add anything if I'm wrong here, but the sell-off doesn't make complete sense to me because all we've seen them do is come in with increasing revenue guidance. So again, they've increased it from 6.9 billion to 7.1 for Q3. So again, that's usually a positive thing. The only other news I can really see coming out, but I'd be surprised that we sell off this hard off it, is that they're going to issue new credit cards made from recycled plastics for their Visa signatures and altitude. So again, I mean, normally this would be taken more as good just for their ESG rating. I don't think it would really deter clients from joining. Even though normally, as an end user, not something you usually like. Normally the cards are a lot more flimsy. But again, I don't think that really justifies the sell-off. So if I'm missing anything, let us know in the comments. But we will now go over the key technical levels that we're paying attention to on this stock. So just to quickly note the resistances in case this is kind of a quick pullback that gets bought up and we continue to the upside. We're looking at 37.90, 39.15 as a first set of resistances. And if we can break that, we have then strong resistances at $44 and $45, which are obviously going to be nice because they're also psychological levels. If we go higher, we have one more resistance to be paying attention to, and this is the 5-year anchored VWAP. So this is an anchored VWAP, so a normal VWAP, but anchored 5 years back. And that's at 46.50, which will be a strong resistance if we push to these upside targets. So again, these are targets if you're normally a long bias trader, or these can be short bias levels if you're more of a reversal trader. Now to cover the downside, because obviously we are selling off as of right now. So as supports, we have the max anchored VWAP at $32. So this is a level I really like the look of. So what a max anchored VWAP is a VWAP anchored from when this stock first IPO'd. So normally, the way we use this level is if you're, especially an investor, this is a great way to look at a stock. If you buy or if you own the stock, your average of the stock is under this value. That's what you want as an investor. And then, you know, obviously as you're above, you should always be in profit. So normally when you come down to this level and test it as a support, normally acts as a really strong support just because, again, this is where fair value on the stock is since it's IPO'd. So if we come into this, you tend to see a lot of orders sitting here, and that's why you can tend to get bounces. So a long bias level I'm paying attention to is definitely $32. Now, if we did sell off any further, though, we do have a $27.70 and a $26 support to also be paying attention to.